Ah, yes, this is about mostly income and sorry, assets and liabilities. Income would not come here, but yeah, assets and liabilities majorly. Now, uh, any questions, people who have already been there? Why are we going back to assets and liabilities again? More than that, actually, assets and liabilities has more input to be given. The balance sheet itself, you can you have to know there are many things in balance sheet. And assets and liabilities, we have just known what is asset and what is liability. We have not known in depth of it. We have not understood it yet. So it's the time that we would go in to assets and liabilities. Now, one thing I would like to share, or I would say my understanding was wrong. Wait, just a minute. Any stock which you would name? No, no one, no one is from Bosch now. Okay, so uh, okay, so one thing I remember, even I had told this, even Kishore and Tadaki had told me about this, that in the websites, or like Money Control or Screener, assets and liabilities are equal. Right, Kishore? Uh, I was wrong here. This is the right way of putting it on the website, or right way of indicating it. I would tell you how and why now. Now you will think it is, how can that be if assets and liabilities are equal? How will company? How will we know that company is in progress? There are ways that we will go and find out later on. But then right now, let's get into this and we'll understand how things goes. So as Kirtana told, we have, just a minute. Assets. Hey, wait a minute. I will change the screen pattern and then we'll go to this. Just a minute. There is something wrong with my tablet. Settings. Keep this as single screen. This is better. My screen is visible still, right? Writing here would be easier. It was getting difficult there. Okay, so as she told, we have two things: assets, liabilities. Okay, now what we had earlier divided was, in assets and liabilities, was current and non-current, right? Current and non-current. Now let's go in the depth of it and understand what actually each one of it means, and we'll understand one by one. Okay, just a minute. We'll go to this. Here we'll go to, where is the balance sheet? ಕಂಡುಹಿಡಿಯೋದೇ ಕಷ್ಟ ಇಲ್ಲಿ. Standalone balance sheet is here. Yes. Now you'll find a lot of words here which we don't know. Okay. Now we'll go here, not word by word. Just we'll try to understand how it works and what it is. Some of it you might know. Some of it we will understand with the time goes. Okay. One thing which we have to say, yes, we have few things here: liabilities and borrowings. Yes. Where did you is? Huh. Okay. So we'll go with the liabilities part first. Is it okay, or we should go with the assets part? Liabilities. Okay. Okay, we'll go with the liabilities. Who told first? We'll go with them. Okay. Yeah. Okay. We'll go with the liabilities. Okay. Now here we had two things as the liabilities. Okay. That was current and non-current. What is current and non-current, if you can recall? Perfect. Current is for 1 year. Current liabilities. Non-current is for more than 1 year. Okay. 1 year plus. Okay. Now this part is same for assets. Correct. Current and non-current. Why I am repeating this? Because Kirtana is new year, so this part I had to repeat. Okay. 1+ years. Now here we have many things to understand. For example, we say okay, in assets also. Okay, in assets also, or current and non-current assets. Non-current asset are something which which in very easy terms, if I have to say, it is that we cannot make it a cash, or we cannot convert into cash within a year, right? Asset cannot be converted into cash within a year. Only then it is a non-current asset. Okay. Before we move to any other part of it, we have a few things we have to consider. That is tangible assets and non-tangible assets. Okay. What is tangible, if anyone knows the word? Just an English word. The asset which we can touch or see comes under tangible assets. Okay. Now, any examples here? Okay. Yes. Perfect. Land. No, we spoke about this, I think. Humans are never a resource. Huh. Okay. So here, gold, usually companies do not have gold assets majorly until and unless they are financing and some other ones. These are very niche companies. So here, this will come to gold and land little late. Will come to something called as machines. Okay. For example, we will say that Akshay has one company and Kishore has one company. We have three companies. Okay. Akshay, Kishore and Karthik. Okay. What all these companies do, for example, we are taking an example here, all are into vaccine production. Okay, now they all would have some machines, right? Correct, no? It might vary with the time they have taken. It might vary with the technology which they have invested in. Okay, they might update in every 2 years, 3 years, or maybe 10 years. Okay, now we'll consider a scenario like 2020 COVID. That time for vaccination we need machines which are more powerful and which make a lot of which take the production high. Correct. Now let's say Akshay uses the same machine. Okay, Kishore takes new machine, and Karthik is like mixed one. He keeps the old one and brings new one also. Okay, why this example I am giving? Now you have to understand. Okay, what happens here? Machine has a shelf life, or not shelf life, a life, if I have to say. Correct. It can go to what do you say, some 5 years, 10 years, or whatever the life it is intended to be. Correct. And also varies on the technology. Now for example, here if I have to say Akshay had invested some 10 crores in machinery for his vaccine production. Okay, how will we know, or we know that after 10 years its value will be something. It certainly that value will come down for sure, right? Okay, that is called as depreciation. Now one part which we have to understand here is, with this depreciation what will happen. One thing is that we might know the cost. We'll say that after 1 year this will be sold for 5 lakhs. This machine, a 10 crore machine, after 10 years would be sold for 5 lakhs. Or if we say it was a computer or a CPU, someone will take for, if you had taken for 2 lakhs, or laptop which we have taken for 3 lakhs or something, it would go for 10,000, 1,000, or even zero sometimes. Gujriga code. Okay, now with this, how, for example, it's been 3 years here. Okay, it's been a new and same Kishore has invested 10 crores with new technology, but then it is new and he has mixed of it. Okay, you can say that both have 10 machines, and you can say 5 here are new, 5 are old. Okay, now you have to calculate the asset value of these depreciating assets. Okay, how will we calculate that? Okay, now one thing is that you know that the asset value will depreciate for this for sure. Okay, the production, they see, now you are only considering the asset value and not considering the production and all. Okay, high chances that production for Kishore would be better. Second, it will be for Karthik, and third for Akshay, because of the machinery and technology they are using on the machines. Okay, we will not go to that. We'll not go to the business part of it. We are still discussing and understanding how a balance sheet, or how these assets will be classified, and how will we derive the value of it. Okay, now you said depreciating asset. How I told, after 10 years the value will be 5 lakhs. Okay, we'll keep it here, and the current value, or the paid value of the, what is it, machinery was 10 crores, and total number of years which we are doing is 10 years. This gives us a value of every year how much the value will decrease. The easier way of calculation is, if you make it 0, okay, every year how much will the value decrease? Yes. So I'm just giving a vague formula. not vague formula, this is the formula, but the vague calculation. This particular thing is called saleable value. That means after the end of usage, or after the end of the life of the asset, what will be its value, this particular thing. So this is a particular formula for calculating the depreciating assets value. Again, this is not what you say, a perfect value that we will derive. For example, you can say after 1.5 years also Akshay can sell it for 1.2 lakhs, sorry, 1.2 crores, depending on what is the demand and how much, but an average value would be still, decreasing value will be still this. Clear? Now, so if I have to say, if we are now, again we are going to calculate this and understand it little better, and then we'll go to the next one. We had Karthik, Kishore, sorry, Akshay, Kishore and Karthik. Okay, so now already 3 years old company, 3 years old value machinery he has, Akshay. So it will be 10 minus 3, right? So his value of the company is 7 crores currently. I mean, not value, asset of the company. Here he has 10 crores right now, 10 crores machinery, and it is not even 1 year. So he has taken it fresh. So the value of the asset is still 10 crores. He has mix of both, and that too we can say 3 years. Okay, 5 is new and 5 is the old one. So 5 crores is probably the right, and here every year, I mean, for 5, what is this value? It will come somewhere around, you can say 1.5. So the value of his company would be somewhere here, 8.5. Not company, assets. Wherever I'm saying company, I'm just missaying that. It's an asset value, and that to the tangible asset value, one of the tangible asset value. You understanding it? Any doubts here? No doubts? Okay. Ayyo. So there is one thing which everyone, what's happening? There's one thing, there's one thing which you have to understand. Apart from the depreciating assets, we also have appreciating ones. But if you see in any balance sheet, the value, for example, we say that Akshay has a land value, or he had purchased for 10 CR only. Okay, it's been 10 years. Okay, after 10 years, the value in the balance sheet still shows 10 crores. Is this the right value? Perfect. But in balance sheet, the value will always stay same. For only in balance sheet, if you see even after 20 years, it will still show as 10 crores only, which is not real. You yourself can calculate that what is the actual land value there. Now, anyone remembers that I had told about one stock based only on land value which I had invested once? Perfect. Let's go there. Let's see that. RCF. So I told that this company has a land which is in the center of Mumbai, which was taken way long before, and still the value, if you say book value and all everything, you'll see that it is lower. But if you see if it unlocks that value, then you have to understand, if the land value is unlocked, how much actual value it is. So this is one thing which you have to keep in mind whenever you are calculating. whenever you are calculating any value of a company, the land value should always be considered little higher than what it was purchased. And one thing you have to notice, that from when they are showing the same land value, something is wrong with this website, I think so. We'll go to RCF, Rashtriya Chemical Fertilizers, my first stock investment. It's 77. I remember I had told you around 83 and it went around 30, I guess, below 30. We'll go here. Where is the balance sheet? Okay. By the way, Tadak is still not here, no? Okay. Fixed assets, current assets, other liabilities. Where have they mentioned about the land here? Okay, they have changed the way we look. Just a minute, we'll go to screener. So we have 2-3 websites which we refer, that is screener or money control. But then more than all this, I always prefer to see the balance, the annual report. Screener. Anyone has seen an annual report of any company? How many pages was it? Nice. You. One company which if you see the annual report, you might go mad or crazy is Reliance. I'll show you that, and then we'll go to the next part of this assets and liabilities. Yellow itu balance sheet. So we have this borrowings and everything. You see, assets and liabilities are equal. We'll come to that. Maybe by next session we'll say that why it is this much. Today we'll study about the assets. Maybe tomorrow we'll go for the liabilities. But then where are we? Trade payables, fixed assets. Yes, land. So, 2010. So the funny part, if you see, this might be probably because they have sold some part of it. Probably. Okay. But then, if I have to say 21 crores, right? 21 crores of land, if they had taken in 1970s, 1980s, that would be at least into 20 for me in Mumbai, if I am not wrong. So it would go more than 400 to 500 crores. This land itself, and I am underestimating it still. I am telling you. Now, before we go to that, we have something called as, if you see here, equipments, which we spoke about now. Plant machineries also. Equipments and plant machineries will still say the same. Furniture has a different value, appreciating and depreciating. Forget about this. We'll go to the intangible assets. We'll see about the vehicles and vehicles also come under tangible assets. All these are tangible assets. We'll come to intangible, and then we'll go to other fixed assets to understand what is it, and then we'll know more about it, how we can calculate about a company. Okay, so I was saying about annual report of Reliance. Any guesses how many pages it would be? Come on, fast. Quite close, 400. So why I am coming to this is there's one simple reason that you guys need to understand that when a company is made, it is made with many other things also. For example, anyone watches Shark Tank? So what is Shark Tank? Okay. Yes. Now you see it is 215, but it is not right. We have two pages on one page at least. Okay. So why I came here? There's a lot to read. We'll not go to that. We will directly come to one important part at the end. Update agana. So Shark Tank, if you have heard about others, have you heard about it? Okay. So for example, tomorrow Akshay and Kishore make and Kirtana makes a lot of money making their own company. Okay. We are not speaking in terms of few lakhs. It might be in hundreds of crores. Okay. After that, we are here now. Okay. Before we go to that, we'll come here. After that, what? How will Kirtana or Kishore grow? For example, we'll say and Akshay, we'll say that they have already made some. For example, Kirtana has 2k crores, 2000 crores. Okay. Kishore has some 3000 crores. Okay. Akshay has some 1.5k crores. Okay. So how will they grow from here? Because their business market is now at one point of one reached at one point. Here from here, growing on a vertical basis on a linear graph like this is difficult for them. Now it might be, for example, if they were growing until now like this, now it will be somewhere like this. Slowly they'll grow. Maybe the technology they have chosen or the market they have chosen is like this. It saturates here. Okay. Now what will they do? And they have the money. What will you do? Perfect. So this is what Shark Tank does. Okay. Why I'm speaking about Shark Tank? Now you'll understand after this. Okay. What they do, for example, Kirtana, Kishore and Akshay, they go to Shark Tank and they sit as judges. Okay. Probably I will come up with an idea saying that I am making some headphones. I'm making some headphones. Every year I have sales of some what we say, some around we'll say 50 lakhs. Sales around 50 lakhs, profit of around 5 lakhs in 1 year. This is in 1 year. Now what I have to do, if you remember, if we are making a company, initially we have different investors. How do we raise money here in here on the initial phase? I'm not speaking about the public IPO phase. Before that, pre IPO phase. Guys. Yes. For example, you are now I have made this company. No one was the investor. It was me. Okay. So how will I grow now? I I need money to grow. Even to advertise, I need money. Okay. So there are two ways. Okay. One is debt, taking loans. Okay, at some point, or give out equity. Now, what is equity? Equity is portion of your company in terms of shares. It might not be shares at that period of time, but it is equity. We say this share of my company is yours. Okay, there are two ways. Now probably mostly people do not prefer this initially. They go with this. Now, what happens? And there are two things I'll go for. One, I need money. I'll go. I mean, I'm saying that you guys have a big company, so I'll go to you and pitch that I have this technology. I need money and guidance because you have already made a way and you have found how to make of success out of something. Correct. Okay. So I'll go and say that. See, I need this, and I have this right now, and I'll say that, for example, and based on this, I'll estimate that my company value is something called as 5 crores right now because I've made 50 lakhs of shares. My current projection value is 5 crores, current company valuation, and then I'll say that I'll give you 10 crores, 10% of my company. Please give me 50 more lakhs so that I can grow my company. As Kirtana told, advertise it or use it for some other things. Now, what will happen? One of you or all of you would be interested in the company, would understand the technology, would like the technology, and instead of keeping all the money to you, what you will do? Okay, fine. I'll give you so and so deal. For example, I had told 10%. You'll say that no, give me 15%. I will also guide you how to grow the company, and I'll give you 50 lakhs. So you will own the 15% of the company, giving 15 lakhs, and you are also finding one way to grow yourself also. Because for example, earlier Kirtana was in fertilizer sector, Kishore was in medical sector, Akshay was in IoT. So they have made fortunes in different technology, but not in this field. So they say that okay, this field is also interesting. I can make money here. You're understanding what is happening here? Any doubts? Not new technologies. New technologies are already made. People who are already made it, they need money on investment to grow that more. From the people like you who have already made a fortune. Now, why did I say that? I said it because if I go to this report, okay, you can see something called as enterprise consolidated subsidiaries. What does it mean? This means Reliance also owns a share of these companies and this much of the share, which come under Reliance. Some are 100%, some are 30%, some are 60%. Now, profit made here also comes to them. And these are also one of the assets of the company. And these are not long-term assets, current assets. These are non-current assets. If you see companies like Reliance, they have invested in so many companies. You're getting this? So many companies, which itself, for example, 1, 2, 3, 4, 5, 6, 7 pages. 7 pages. Only company names they are there. They have invested. It's literally theirs for current 100% theirs. But selling a company tomorrow is it easy? There are more corporate actions. 1 year, yes, but but it is not a kind of asset which is what is it? Chalo, I'll go and sell it, and I'll raise a price for this. If you know Ruchi Soya, it to sell that company it took 2 years. So any see, we are not we must know that selling an asset, in terms of, if I have to say, as Kirtana told, gold, land, and all, even this can be done in a year. But a company with a corporate action and a lot of formalities, advocate formalities, CA formalities, would take more than a year. If everything goes right, yes, less than a year, but it is always considered like this with the worst case scenario. Correct. And these assets are also appreciating assets mostly. So if you know, if you have invested in the right company, the value itself grows. But then we cannot consider this as appreciating asset when you are calculating the balance sheet. You can keep this in back of the mind, but but when we are writing down the value, you should always know that no, this is not the right form of it. Clear? And at least for this is not an appreciating value. You'll not consider this an appreciating asset. It's just an asset with certain value, which varies on the share value of that company at that period of time. That's it. No, 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 no. Good question. So it was, for example, it was bought for 10 rupees, and sorry, not 10 rupees, huh? Even less. So one thing you should know that corporate deals, no, they go for little lower price than what public gets. Okay, for example, this value or share value would be 20 rupees that time each share. But then Reliance will say that I'll buy it for 18. I'll give me this much percent of, as you told, 60% of the company. I'll buy it for 18. Due to one or the other reason, or maybe for even for high, sometimes they buy, perfectly fine. But then that was the value then. If today the value is 5 rupees, you have to take in your asset saying it was 5. It is 5. If it is 50, you have to consider as 50. But never over project, saying that in 1 year it might be 100 also. You can say that, for example, for some technologies you can say that this technology is moving, for example, the delivery sector, it is moving fast, so you can say that okay, they might go here. The banking sector, if they payments bank, even that would go. But you cannot overestimate or future estimate the value when you are calculating the balance sheet. And only you have to calculate is the current value of those stocks. Based on that, you have to calculate. Yeah. Balance sheet, as in not everything, only these values will differ. But these value don't calculate daily, no. You calculate it once and you understand, and then it will you'll keep it for quite a long time. Okay, we'll go to non tangible assets, and then we'll understand something about Reliance, so that you can understand little better about the companies. Is that fine? Okay, so let's go to non tangible assets. Yeah. Hmm. Correct. On the land, no. This is how balance sheet works. So, for example, you have taken a before. Okay, again, we'll come here. For example, you have a company. Okay, you have a company, and you have owned you have owned the land for 1 CR 10 years ago. Okay, 10 years ago. Now you will see this 1 CR as an investment for your asset, correct? Now when you are calculating your own expenses of things, would you calculate this saying that today you might say that its value is 20 crores? Would you calculate that you had spent 20 crores then? You would only say that it's 1 crore, no? So the value spent to take that asset, to make that asset, is the asset value. This is little tricky with the share part. Okay, the share of the company varies, because and you can see the value, but the land value, no, it is, for example, we might say we have some 50 sites here. Okay, but some are near the road, the main road, some are near the secondary road, some do not have road. Okay, you can, for example, you'll say this is a 10 crore property, this would be 5 crore property with the same area, or maybe even more area. But then, I mean, I'm just vaguely saying it would not vary this much. There would be a maximum of 1 crore of difference, maximum. But then you when you're calculating your asset, no, it goes wrong here. But when you're considering the share price, you already know the value, right? Clear? Any other doubts? Transparency, you cannot say transparency is less. The value calculation is little difficult for the land at every given time. Correct. Yes, in the annual report they will be displaying this. Yeah. Say everything for an investor, no. They have to tell you that this is how we have spent the money. Now, uh, okay, no, this part, the balance sheet part will come to complete part will come to next in the next session. But then, why is balance sheet called as balance sheet is one question which I might ask. Why is it called as balance sheet? Why not something else? This is very basic that I forgot last time when I answered Kishore and Tadak, and when even I was thinking based on the screener.com. What is this? Yes, this is why it is called as balance sheet. We'll come to this. This is very tricky. When I was like, okay, fine, I went completely wrong here, but then this was completely right. I'll come to this probably by next session. You will understand why I said this. What was the reason? But then balance sheet is called as balance sheet because of the balance it maintains. If you say it is a seesaw or something, it has equal weights here, 1 kg, 1 kg, or 1 rupees, 1 rupees. That's why. Clear? Huh. So What is non-tangible assets, if I have to say? Any guesses? Even shares are non-tangible. There are many other non-tangible things, but we will concentrate on two important things. When we go to liabilities, no, then I'll go to the next part, because this will confuse if I have not explained the liability part today. Then that's why I'm taking only two of the examples right now. I think most of you have heard about a software company. They provide this software. Correct, no? Now, this is their asset. Any questions? Any understanding here? Correct. Correct. So it is licensed. So for everything which they are giving us is paid for it. For even one thing, for one single thing, they are getting paid. But then, how long does this sustain is what we actually calculate. We know that patents, it goes for 20 years. Sorry. Correct, no? Is it changed? No, right? Wait, I think it was 20. If it has changed, I'll check it. Just a minute. I don't want to be wrong. Uh, 20 years. And design patent valid generally for 15 years. Okay. Yes. So, what did you understand from this? Before I take one more part here, what did you understand from this? For example, they're not selling the software. Then, okay. One more thing. I don't know the generalized thing of. Okay. So, at least Kirtana Kishore knows this. Asket, you have heard about it, right? Is it sold or licensed? No, I'm only speaking about our company, or X one. No. So the revenue of that company, if you are making an asset, which in turn helps to make an asset. Now, you are using, for example, MathWorks itself. They will, if they use in their own company, they are not making money out of it. Correct. No, if they're like, for example, for every user, if they're charging the user to give money, then you'll not go and work there. But then they are using their own software to make new softwares or new things out of it, which in turn is an asset and which generates a revenue. Any doubts? Akshay, Karthik. So I can repeat, yes. Huh. So we say that there is a software, okay, for other companies. For other companies, it is licensed. I'm saying you have a company, you have made a software for other companies, you'll keep it licensed. For your own company, will you keep it licensed? Licensed as in, will you ask the company to pay for it? Company as in your employees to pay for it? No, right? So what here happens is, anyways, in any terms, they are, even if these companies are purchasing the software, what will they purchase for? To create or make a new asset, which they'll sell and again make money out of it. I mean, anyone is not mad to pay 8 lakhs for a software and use for nothing. By paying 8 lakhs, they will be sure that at least more than 8 lakhs I'll make. Correct? No. So one thing is, this is asset for sure, but you have to also see it is a revenue source. So revenue source, income source, we will discuss about that later, but then it is an asset. Softwares are an asset which you have to understand, and you have to understand which software, which company has an asset something like this. Ah, SAP. Correct.